All of the U.S. stock market averages managed to eke out the week with small gains, and that was following another huge reversal on Friday. The Dow Jones finished up 564 points, but earlier in the morning, before the market opened, the futures were down over 400 points. In fact, I think the low during normal hours was down about 350, but still was about a 2.5% swing from the morning low to the close. NASDAQ had an even bigger swing. It finished the day up 3.2%, but that was a 4.5% rise from its morning low. Though the NASDAQ finished the week slightly positive, it's still down about 11.5% on the month. But again, the losses are concentrated in the more speculative part of the NASDAQ. Again, look at the Cathie Wood ARK Innovation. It had a huge rally. It closed up 3.9% on the day, but that was 7% off its morning low. In fact, the new low, 64.35, which it set yesterday morning, represented a 60% decline from its peak price. And even though it was up on the day, it still finished down 3.6% on the week. So bucking the trend, NASDAQ up on the week, but ARK Innovation still down, and it's still down 27% on the month of January. I think it's very possible that this could end up being the worst January for the stock market ever, certainly the worst January for the NASDAQ ever. One of the reasons, though, that the market held up was Apple, which was up 7% on the day. Apple released its earnings after the bell on Thursday, and they beat across the board, so that kind of set the tone. At least the market had that good news to hang its hat on. We also had bad news that came out of the trading app Robinhood. They reported horrible results, worse than expected after the bell on Thursday, and the stock tanked. It was down maybe close to 20%, 15% or so, traded below $10 per share. I think the low was like $9.94 during the normal session. It may have traded a little lower than that in pre-market. I think it did. But that represented an 88% fall from its all-time high, $85 a share, and it set that high in the second week of trading. So it went public, and then in the very next week, in August of last year, the stock traded at 85, and yesterday morning, it traded hands at under $10. Now, we had this big reversal in the stock. It ended up closing at $12.73, so almost a 30% rise from the low. To me, that was short covering. In fact, I think a good part of Friday's rally was shorts covering. They have some big profits. They're going into the end of the month. They probably wanted to take the opportunity to realize some of those gains and put them in the bank. And so that's what this rally smells like to me. I do not think the stock market is out of the woods by a long shot. I think we still have some work to do on the downside. And by the way, the worst is not over for Robinhood. Think about that company, because Robinhood's customers, the millions and millions of people that have downloaded that trading app and have been buying and selling stocks and cryptocurrencies, all these guys are going to go broke. I mean, if you have a business and all of your customers are broke, what's that business worth? I mean, you don't have any value if you don't have any customers, because if your customers are bankrupt, they can't generate any earnings for you. The Robinhood customers are the ones that loaded up on Robinhood stock and all of these other meme stocks and cryptocurrencies that are now collapsing. So they are in the process of getting wiped out. And if Robinhood couldn't make a profit during the bull market, which it didn't, how is it going to make a profit during the bear market, which it can't? This company is never going to make a profit. And if you're never going to make a profit, well, then how are you going to stay in business? They can't. They've been able to stay in business because they've been able to sell stock to investors. Well, how are they going to do that in the future when the people who already bought stock are getting killed? In fact, what's really going to be a problem for Robinhood is going to be lawsuits. They are going to be inundated with millions of FINRA arbitrations because all of these people who lost money are going to sue to get it back. Nobody had fun losing money at Robinhood. Most of the people who downloaded that app thought they were going to make money. They thought they were investors. In fact, they thought they were brilliant investors. They thought they were on the cutting edge of a new investment style, and they confused brains for a bull market, or more specifically, for a bubble. Now, the stock market may have eked out some gains thanks to a big rally on Friday, but not so for the gold and silver market. Gold and silver continued to lose ground on Friday. In fact, gold was down $40 on the week. We closed below 1800, 1791.50. Now, I think this is the support area for gold, so I do expect gold to rally next week. We'll see if I'm right. Silver really got beaten up. It was down $1.70 on the week, so it was a terrible week for the mining stocks. Gold and silver mining stocks down. GDX down 7.4% on the week. That was a big loss. In fact, the biggest losers were the silver stocks. Almost every silver stock I own hit a 52-week low on Friday. So I thought silver looked like it was leading the market higher. Now it's leading the market lower. There is tremendous volatility here in the metals market as traders are trying to brace themselves for the rate hikes that Powell is promising to deliver. But I still think the market has got this wrong on the impact the rate hikes are going to have on gold and silver and on the dollar, which continues to rise. The dollar has been powering higher. It gave back a tiny bit of those gains on Friday, but the dollar index still closed at 97.21, up solidly on the week, as it closed last week at 95.64. So one of the strongest weeks we've had in some time in the dollar index. And again, the same thing that is pushing the dollar up is what's pushing gold down, and that is this hawkish Fed that's going to be raising interest rates, and those higher rates are supposedly going to be supportive of the dollar and a big headwind for the price of gold and silver. But while the price of yellow gold was falling, the price of black gold keeps on rising. Oil had another positive week, closing at 86.82. It closed last week at 85.14. But look at the intraday high on Friday. A barrel of oil traded as high as $88.84. That's the new high water mark. I expect that the markets will take that out next week. In fact, I think by the time Powell gets around to that first rate hike in March, the price of oil will likely be above $100 a barrel, meaning that the Fed is continually falling further and further behind the inflation curve as it waits patiently to pull the trigger. But again, Powell is only talking tough about raising rates because he believes that we have this super strong economy, or at least that's what he claims. And he also claims that these rate hikes are not going to hurt the economy. They're not going to hurt employment because it's so strong, and that maybe higher rates have been a problem for the economy in the past, but it won't be a problem in the future because the economy is so much stronger now than it's ever been. I mean, he's talking about the economy as if it's never been this strong. The labor market has never been this good. And so it's bulletproof, right? It's impervious. The Fed can do no harm. We could raise rates. We could shrink the balance sheet. And this super strong economy is just going to take it in stride. That is complete nonsense. First of all, if the economy really was so super strong, why did the Fed wait so long to raise rates? In fact, it's still waiting. It's not going to raise rates until March. If we really have such a strong economy in the face of the worst inflation in 40 years, why wait? Why not raise rates right now? In fact, if the economy really is so good, why didn't the Fed raise rates last year? Why didn't they act preemptively? Why didn't they take on some insurance? After all, this strong economy could have handled it. Obviously, the reason the Fed didn't raise rates last year is because Powell knew the economy was too weak to withstand it. And it's still too weak because it's weaker now than it was then. If you look at the new economic data, the economy is already slowing down, yet the Fed wasn't willing to raise rates last year when it was stronger, and now that it's less strong, Powell is claiming that it's the strongest ever, and therefore he has the ability to raise these rates without affecting the economy or employment. Look, he is simply looking in the rearview mirror at how the economy was when it was propped up by massive Fed support. Now, Powell thinks he can remove the very support that was underlying the economy, and the economy is going to be fine. It won't. It will come crashing down. The reality is, it's not a strong economy. It is a bubble. This is the biggest bubble we've ever had. Powell doesn't know the difference between a bubble and a strong economy. In fact, no one at the Fed seems to know when we have a bubble. In fact, Alan Greenspan was famous for saying you never know when there's a bubble until after it pops. Of course, back then I was saying it was nonsense. If it walks like a bubble and looks like a bubble and quacks like a bubble, it's a bubble. And this is the mother of all bubbles, yet the Fed still doesn't understand that it exists, and it thinks they could take a pin to it. And in fact, because this bubble is so big, even the smallest of pins will prick it. The reality is the economy today is more vulnerable to a rise in interest rates, even a smaller rise than it was in the past. Because the bigger the bubble, the more dependent it is on all that cheap money. And so the bigger the bubble, the smaller the pin that's needed to prick it. And in fact, Powell has already pricked the bubble, whether he knows it or not, just talking about the pin.